Time now for business. Let's say hello to Kate Moody.
Hi, Francois.
Let's go back to our top story. It's all happening at Westminster. Let me go over this. Let's see. Parliament trying to push forth its own Brexit proposals. There's going to be those indicative votes that we'll have the results for those a bit later. The Speaker warning the Prime Minister that she can't put up her twice rejected divorce deal a third time unless it's changed significantly. And these reports from MPs that she's promising backbenchers she'll step down. So much noise out of Westminster. How are the markets taking it?
Well, that's always the question. And the answer today might surprise you, Francois. The pound sterling, perhaps less volatile than you might have expected in the past week or so. The pound was trending down earlier in the session, but as you can see, it's regained some ground there as those proposals are clarified, holding steady just above $1.32 there and €1.17, hovering just below a 9-month high. Sterling still roughly 12% below the levels that were recorded before the referendum back in June 2016. Now, to get some insight, we can cross to London and speak to Ranko Berich, head of market analysis at Monex Europe. Ranko, thanks for being with us this evening. Still, of course, a lot of uncertainty as we head into another marathon round of voting. From the market's point of view, what would be the best case scenario this evening?
The best case scenario this evening would be a clear move towards either May's deal or some type of a rapid resolution in terms of bringing some type of withdrawal agreement through Parliament and fully ratified with the EU in the immediate future. Barring that, it's looking like more sideways price action based on delay, further indicative votes, so on and so forth. However, I think it is worth noting that on the whole, the developments in Parliament, with Parliament looking to take control of the whole process, ironically actually increase the chances of May's deal actually passing in the near-term future because, of course, it puts pressure on May's own Eurosceptics to fall in line behind her deal or risk a delay or a soft Brexit outcome.
Now, investors have spent about 2.5 years now assuming that the worst case scenario, or a no-deal Brexit, would be avoided at all costs. This close to the wire, how can they still be so relatively optimistic about the future?
So I think we've got three assumptions at play with sterling at the moment. We have, firstly, the fact that there's a bit of headline fatigue. There's just not a whole lot of signal in the noise of the Brexit headline, so there's kind of getting a diminishing impact in the sterling price. Secondly, there is the assumption that Parliament will rule out a no-deal Brexit, and that assumption has kind of been priced in steadily since December, November. The sterling's rallied about 7 percentage points since then, so that's roughly what that no-deal Parliament stop is worth basically on sterling. And finally, I think there's really just a little bit of apathy in general in G10 FX markets. We're not seeing a whole lot of volatility in the G10, and so it gives sterling perhaps a slightly longer leash.
As you said there, the pound perhaps surprisingly resistant to the recent ups and downs. What should we be expecting on the currency markets for the next 24 hours or so?
So I think if we see May's deal move to a third meaningful vote, hopefully an actual meaningful vote this time, if it looks like it's going to pass, we would expect sterling upside in the order of 3 to 5%. If it looks like this whole mess is finally going to be at least semi-resolved. So that's the upside. And the downside, if there is, some type of an absolute calamity, a risk of May standing down and potentially being replaced by a true Eurosceptic, or the chaos of a general election and a lack of clarity about whether or not the EU will move the deadline for Brexit forward, then we would see downside. And as I mentioned before, the first stop, if that assumption that a no-deal Brexit is unlikely is ever challenged, the first stop for sterling, we would say, would be about a 7% loss if a no-deal Brexit began to become a real possibility again.
How are businesses feeling? What contingency plans have they put in place? What are they looking for in the next few weeks?
So most businesses that really would be affected by a no-deal Brexit have put contingency plans in over the last couple of years. Probably the single most important factor for the UK economy as a whole is the delayed investment, and we're finally starting to see the labour market slow down a little bit. And if it continues, the question is how much of those delays will become cancellations of investment and hiring. So at the moment, it's basically put a lot of activity in the UK economy on hold.
Ranko Berich, thanks so much for joining us on France 24. Let's finish up with a quick check of the day's trading action. Not too much movement on the major European indices, although shares of Commerzbank were up about 5% on fairly strong annual earnings. Fiat Chrysler shares up about 2.5% after a Financial Times report that Nissan could be seeking a merger with that car maker. Wall Street's trending down. We're seeing the benchmark 10-year rate hitting its lowest level since late 2017. Boeing shares had been down as much as 2% earlier, slightly less now, as it prepares to release the details of a software fix for its 737 MAX planes. That meeting, Francois, taking place at Boeing headquarters in Washington State, while in Washington, D.C., the FAA is going to be talking about its oversight process and how it verifies Boeing planes. It's a very big deal for the aviation industry today, and we'll be keeping an eye on it as it develops.
Yeah, a lot at stake for Boeing and for travelers. Many thanks for that, Kate Moody. We'll have more business news for you later.